Yo, 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 what is going on, everybody? Welcome to TrendSpider Live. Let me make sure this is actually going live here. Got a new stream set up, so work with me here if it's being a little weird. Let's see. I think we are live, though. What's up, everybody? We are going to be looking at Netflix earnings today. The market just closed. Let me go open up the 5-minute chart and see what's going on. Move this over there. All right, let's see. We'll put on after hours data. If you're in the chat, say what's up. It looks like Netflix is ripping. Is anyone out there? Can anyone hear me? It's a new stream setup, so work with me here. What up, everybody? Wow, Netflix is ripping. Let's see what happens. Let me get the news widget going here. Crazy busy day today. What up, everybody? Looks like we're getting some nice movement here in Netflix. Is anybody playing Netflix? That's my question. It's the first, I'd say probably, I think the first big earnings of the quarter. So we got a lot coming up here in the coming weeks. I think we got Tesla next week. So it should be a fun time, you guys. Should be a fun time. We have this news widget. We'll see if you got any news coming out. 2 hours ago, not yet. But whatever it is, the market's liking it. Netflix is moving up right there. We have some pretty sick stuff dropping for you guys. I don't know if y'all saw, but we have polymarket data and TrendSpider now. Pretty awesome. I'll show you guys a little bit of that. Actually, let me pull it up right now because there's actually a polymarket for what's going to be said during the Netflix earnings call. And I have pulled up right here. And so you can literally bet on polymarket, apparently, of what is being said on the Netflix earnings call. That's about to be happening here in about 45 minutes. I'll always sit here and watch. The Netflix earnings call starts in 45 minutes at 1:45 Pacific, 4:45 Eastern. Let me see. Yeah, it's tanking right now. Something about options trading. I don't remember mentioning something about options trading, but we are building in options data into the platform. Right now we have the unusual options activity. But that's mostly the best thing for options on TrendSpider. Let me see what the numbers are. Let me refresh this widget. Let's see what's going on here. Market is going up and down like crazy on Netflix. A little bit indecisive. All right, a minute ago, we got a couple things here. Netflix Q2 EPS beats. EPS beat, sales beat, 11.07 billion in revenue. Let me see. Their expected was, well, last quarter was 10.54 billion. Now we're sitting at 11.26 or 11.52, which did beat the estimate. So it was a double beat, it looks like, you guys. So, but I don't know. The stock is kind of going back and forth. Someone said split question mark. Y'all saw something about a split. Not sure. But yeah, they definitely beat earnings, and it looks like they're coming down. And we'll hear the call here in about 45 minutes. I don't know, who's betting on what's going to be said during the earnings call, but if you look at our indicator right here, you can see Squid Game is at the top. There's a 95% chance that they mention Squid Game, apparently, according to the betting odds. The chances that they're mentioning Canada have dropped on Polymarket to 77%. America, gaming, and Q3 are all up here that people are betting on. Yeah, check out the daily chart. Let's see what's going on here. Yeah, so it's up there. It's definitely up there. That's kind of a crazy wick on the daily. This is live updating, by the way. If you on TrendSpider, you can click this little button up here and get after hours data. So yeah, it's trading pretty high. Let's go into the weekly real quick. It's pretty much at all-time highs. So it's not incredibly surprising that they're coming down, even on a beat. Yeah. But yeah, they're not. Let's see what this move is so far. Since close, they're down about 3% or so. Nothing crazy. But yeah, some other interesting stuff about Netflix. If you see my reports tab or the seasonality tab over here by my mouse on the right, they have a really bad time in July for whatever reason. Netflix does 33% of the time, or sorry, 67% of the time, they are red in July, which is kind of interesting. Not sure why, start of the summer. And then they have bad times in March and April too. A little interesting. It's cool being able to see that data though. Can we move this back? Yeah, let's go back a lot further than that. Get more data. Okay, so with, since 2002, July is still bad. 42, it's the worst month by far. 42% of the times we are positive. I'll pull that up right here. This is our seasonality gauge on TrendSpider. Pretty useful, honestly. And you can build strategies based on it. Like we have a sell in May and go away strategy, which is pretty cool. By the way, guys, we do have a sale running right now. Let me see if I can drop that into the comments right here. Should go across everything. I'm on a different stream setup, but if you use that link, you can save on your TrendSpider subscription today. Thank you for joining the live. Wanted to drop that for y'all in the chat while you're here. Yeah, winter months, more people are inside. That's very fair, to be honest. The bad seasonality in July. Maybe people are just touching grass more for sure. But yeah, we have a lot of more earnings coming up in the future as well. But I've been messing around with this poly market indicator a lot, you guys. Like aside from like this kind of interesting one regarding, what is being said on the earnings call, there's actually some really cool stuff that you can do regarding like the Fed rate cuts and stuff like that. Because if you go and open them, let me drop the link. If you guys are on TrendSpider, you can use this link to open the poly market custom indicators. And what you can do is basically scroll through here and see all the different markets. Like this one, I have how many Fed rate cuts in 2025, and these are live updating. So that, as the rate cuts odds go up and down or how many, you can actually set alerts for them, get alerted based on what people are betting on, which is honestly one of the best ways to keep up in this market, to be honest. Like these betting markets are like quick to update, and there's not really any other way to get updated of stuff like that. Definitely not with alerts. So it's a very cool integration. I dropped the link for the poly market suite in the chat if you guys want to check it out for sure. Yeah, let's see what else we got. We can pull up the analyst estimate history as well on Netflix and see what analysts are expecting. Let's take a look. So the average and median are sitting right here pretty much at the current price, around like 1,300 to 1,250. We have the top of the line estimates saying about 1,600 price target, and then we got the bottom of the line estimates sitting at about 1,071. So we're pretty much on par with what analysts are expecting. So there's that. Let's see. Let's see how we're moving so far. We still got a little bit till the call comes out. So, we got some movement now, but depending on what they say during the call, the forward guidance will definitely be important. So yeah, we'll pull that up. We'll see if I can stream it for you guys live as they're talking and see what we can find out about Netflix. Let's see if there's any insider trades on the chart too. We have this insider trades on chart indicator. It looks like nothing but selling from insiders recently. You see all these sells on my chart right now. This is the custom indicator we built. So insiders haven't been buying. Let's check out Congress trades. So we got a guy that sold at the top from Congress. We do have some Congress buyers though, which is interesting. Taylor Green. Or Marjorie Taylor Green. So there's some buying. I think they're selling puts, maybe. But yeah, also another great indicator that you guys should check out on the TrendSpider store. Always fun to see what, the big boys, or I guess the people with insider knowledge are trading, right? Congress. Let's see. Yeah, it was a double beat. So yeah, we'll just wait for their earnings announcements until then. But for now, let's go ahead and scan for stocks that are going to be having earnings coming up. Or first, let's actually take a look at the previous earnings. Obviously, you can see the revenue on Netflix has been growing massively over time here. Let me hide this other indicator so we can see. But I have the fundamental indicator on my chart. This is for EPS, actually. Let me show you the revenue growth, though. I mean, the revenue growth on Netflix is incredible. I mean, look at that. Straight up and to the right. You can see it in the reports tab over there. They don't really miss much. They do not miss much. EPS was missing a little bit in, when was this? Like 2022. Yeah, they're having a tough time in that 2022 dip. But man, they made a recovery. Crazy recovery. Anything y'all are watching? Let's see. Tomorrow will be my top for SPY. You're entering shorts for 2 months out. Let's check out SPY real quick. Let's pull up SPY. Yeah, SPY has been on a tear. Great day today. It looks like, did we just hit all-time highs? Yeah, we did. Yep. SPY at all-time highs. QQQ, same thing. Looking great. And let's see how small caps are doing. I know IWM had a great day as well, but they're definitely lagging behind the large caps overall. Recently, small caps have actually been pushing pretty nice. From the bottom there, 30% up. Let's see how that compares to SPY. From the bottom here, about the same, 30%. So, it's matching. I wonder if QQQ is leading. Yeah, I don't know. Puts at all-time highs is always a tempting one, but a sketchy one. QQQ's up 40% from their low. So, tech is definitely leading. So, yeah, it'll be interesting to see how, because we have so many tech earnings coming out, you guys. We got Tesla coming up. Let's check out Tesla. Tesla is always a fun one to look at. Doesn't look like it's doing a whole lot recently. It's been consolidating in this range. Their earnings haven't been that good lately. Not good at all. Looks like they missed last quarter revenue, and then next quarter they're expected to not do super hot either. So that'll be a fun one to watch, definitely. And let me show you guys real quick. If you wanted to see upcoming earnings for, let's just look in the NASDAQ 100. I'll just open the market scanner like I did. NASDAQ 100. I'll just drop for you guys too a scan that'll show you upcoming earnings. I'm going to drop it in the chat for you guys right now. But yeah, the way to do it is super easy. Just add a condition here, and then you're going to use, we have one literally called earnings dates is within next X days, and we'll just do 30 days out. And let's see what earnings we got to look forward to. Pretty much almost all these big tech companies. I mean, we got Apple. Let's actually start with, let's see, we got next 7 days first. Intel, Google's coming up. Oh yeah, Tesla. So Tesla's the biggest one. We'll probably go live for that. Hope to see you guys there. But they're coming in on July 23rd. That'll be a fun one. That'll definitely spook the markets a little bit. But that is one way to use this scanner, you guys, is easily able to see which earnings are coming out. I dropped the link for you guys to import. You don't have to build it yourself. Down there in the chat if you're interested, and you can just go ahead and change this from 7 to 14, whatever you want to do. Yo, Strat Soldier, what's up? But yeah, what is everybody else watching today? Let me pull back up Netflix, see if we're getting any more action here. Let's see. Yeah, so honestly, it's been kind of like, we obviously had movement, but hasn't really realistically moved a whole lot from the close, down about 1%. At the lowest, we were down 3%. So, probably waiting to see what they say on the call. Coinbase, that's another one I think that's coming up also, right? Let's see. Coinbase earnings on July 31st post-market. Yeah, this has honestly a beautiful setup. I mean, crypto has been popping off, you guys. Shout out to all the Bitcoin holders out there. But look at this. A little like cup and handle forming right here, breaking out. Yeah, coin has honestly been killing it. Like revenue growth has been good. Let me plot the revenue on the chart, the revenue indicator. Go to the weekly. I mean, yeah, price has basically been following revenue. Look at that, almost to the T. And we are sitting, it's like the IPO price is around this 380 mark, and we're breaking above that. That's interesting. Had a little cup and handle breakout over the IPO price. You see this pivot level right around 330. So yeah, coin has definitely been killing it. I mean, it makes sense with Bitcoin. Let's pull up Bitcoin real quick. Bitcoin has a very similar chart, breaking out of its base right here around like the 110K. I got up to over like 123K at one point, and it's been looking nice. Let me put the volume on. Yeah, volume has been decent, kind of high on the selling. It was pretty good on this breakout candle right here. XRP has been popping off too, you guys. Altcoin season might be upon us. I mean, XRP is damn near at all-time highs. But Ethereum too? I haven't really looked at Ethereum much, to be honest. Yeah, wow, Ethereum. Crypto is looking nice, you guys. Let me check out Solana. Solana is honestly, like, it looks okay. It's making these higher lows, but I don't know. I feel like it's lagging a little bit. I mean, I'm obviously compared to XRP. I mean, even Ethereum, it's kind of lagging behind now. Is Ethereum going to be the king alt again? I know it fell off for a while. Nice. 2000 XRP at $1.67. Not bad. Not bad. I think MicroStrategy is reporting soon too. Let me see. Yeah, MicroStrategy reports on also July 31st. They have a beautiful setup on their chart. They just broke above this pivot level. I mean, fundamentally, the stock is not very good. What is their EV to sales ratio? EV to sales, not bad, 5.7. It's not bad at all, to be honest. But I just don't think they're very profitable. Yeah. You can check out their operating cash flow. Let's see. Plot the operating cash flow on our chart here. Some negative, some positive. It's an interesting company. I mean, everyone just sees it as a Bitcoin proxy since they own so much levered up. I don't think anyone even cares about their business that much, realistically. BA for tomorrow. Let's take a look. Yeah, BA's been doing nice. BA has been doing nice, breaking out of this long downtrend right here. Let's see. How's the revenue? Revenue is pretty just steady. Nothing crazy, but, Boeing's not going anywhere. Yeah, they have pretty terrible planes, but, they're hanging in there. They're hanging in there. It's that inside day for tomorrow. Let's see. Yeah, I mean, it's been a tight few days for Boeing here. Definitely. Yeah, that's an interesting one to watch. Definitely. Pretty much, yeah. Inside day here. Wasn't one there. Yeah. It's in this tight range, though. So, NU. What is NU? Not even sure what this is, but setting up okay. This has nice revenue growth, nice EPS growth. This one looks solid. Fundamentally. Yeah, BA has not been fun to hold for many years, for sure. For sure. I mean, what was this? Yeah, in 2020, they really haven't recovered a whole lot, have they? So, I don't know. But they're starting to get some movement. I don't know if you guys are into the small caps, like SoFi has been popping off. I mean, SoFi is at 22. Beautiful moves in SoFi. Let me pull up Netflix again. What time is it? It's still got about 25 minutes until the earnings call. Let me see where that is. See if I can stream it for you guys. Go to investor relations here. Yeah, I should be able to get in. Maybe it'll stream it for us. But we still got some time till then. Oh yeah, Oscar. Yeah, we did a whole webinar on Oscar lately. Ooh, Oscar has come down though. Look at that. Look at that. Revenue still looks great. But yeah, That other company, I forget which one it was, pulled guidance. So a lot of these companies similar to it just took the heat from it. Hims, honestly, still looking pretty good. It's another good small cap name. Of course, yeah. Forward guidance is always going to be the big tell for sure in earnings, because I mean the earnings themselves are basically now priced and everyone knows what it is, but what they say going forward definitely will drive the price. Obviously, the last company, I mean, Oscar died because a company similar to it pulled their guidance, and that's just never a good look. So yeah, the market's forward looking. You want to see stuff. You want to see stuff that's going to be happening in the future, so that's why forward guidance is always very important. But yeah, look at all these earnings are coming up in 14 days on the scanner right here, you guys. Google, let's see what else. MicroStrategy, ARM is another fun one. Let's see, hasn't really gone anywhere, but it is a solid company. Pretty recent IPO there in 2023, but stable, solid company. I think Nvidia actually reports kind of late. Yeah, they don't report until the end of August, but man, they have been popping off at all-time highs. Congrats if everyone who ever hold Nvidia. Definitely making some money there. The healthcare sector, yeah, we can pull up XLV and see how healthcare is stacking up. We can even make a bubble map probably of, let me see. I think I have a sector ETFs watch list here. We can go to the stock market map and we can customize it. And I'll use my sector ETFs list. And we're going to sort these by probably, let's do a 30-day calendar day change percent. That was for what? The horizontal. Yeah, that works. And then we'll do, usually like to do like a year change percent, not year to date, year. And then the size of the bubble, I don't know. We'll do, these are all ETFs, so we can't really do much fundamentals. I don't know, just do 7-day calendars. And let's see what's popping off here. So the way to read this is horizontal is the last 30 days. Vertical is the year change. So yeah, gold is up here, leading over the last year out of the sectors. I guess more of commodity, but and then XLC communications been leading over the last year. That's towards the top. What has been dying has been bonds, energy, and healthcare. You see healthcare, someone mentioned healthcare has been in the dumps, and you are definitely correct. It is the worst performer out of the sectors, out of my list here, XLK, all these sector ETFs over the last year. And even honestly, the last 7 calendar days, it's all the way to the left. XLK has been pulling up ahead over the last 7 days. What do we have over here? Semiconductors actually doing the best over the last week. That's a good one. So on nat gas, I don't really follow nat gas a lot. We can pull up the futures. Yeah, I don't know. It hasn't really been going anywhere. Not super big into commodities. Let's see. Yeah, what else we got here? Financials have been doing pretty good over the last year. Let's see what like JPM is up to. Yeah, JPM's killing it. Utilities are actually up there. That's interesting. SPY, of course, XLC. But yeah, gold is leading over the last year by far. Is anyone holding gold? SMH, shaking my head. Sometimes, yeah, semiconductors a tough market. Well, not tough. I mean, it's been doing great, but yeah, with all the AI developments and whatnot recently, tariff stuff, it's been it can definitely get wild. But I mean, if you're just sitting there holding SMH, I think you're probably happy right now. AMD's been popping off lately. AMD has definitely been popping off lately. When does AMD report? AMD reports on August 5th. So coming up. Yeah, no problem for the reviews, of course. Let me see this Netflix. It's 3 p.m. Pacific time. Annual meeting of stockholders. I don't think it's the right one. Hold on. June 5th at 3 p.m. I guess it's all the way over at 3 p.m. I thought it was at 4:45 Eastern. Interesting. Okay. Oh, wait, July 7th. Oh, no. Yeah, it is. Okay, I got it right here. Video interview. Let's see. It's on YouTube. Yeah, so it starts in 18 minutes. Should be able to get that up. I do. Let's see. What else we got? Pull up the Magnificent 7 in this bubble map here and see what's doing well in the Magnificent 7. Can't talk. See what stocks are outperforming here. Let me add a color flag there. Color flag. So we got, hold on. It's all the way up here. Meta has been killing it over the last year compared to the rest of the Mag 7, I guess. Nvidia's up here as well. Yeah, so Meta, Nvidia have been the top ones in the Mag 7. Google's down there. It looks like Apple. Yeah, Apple's been lagging for sure. Yeah, Apple is not doing nearly as good. Google's kind of down there as well. Microsoft is actually pulling up. Yeah, it's at all-time highs. That one's been doing good. Tesla been doing bad lately, but over the last year, it's actually still up there with a plus 26% change. If you guys don't know how to use these bubble maps, I highly recommend looking into it. Makes analyzing lists of stocks super easy. Super easy. As you can just see them all visually right here. So, yeah, let's see. Oh, UNH is also a good one. Hold on, let me pull up Netflix. Netflix is looks like it's taking a breather here on the 5. Hasn't really done a whole lot since we last looked. So let's move on from that. We'll have their call in about 20 minutes, so we'll probably get some more movement then. UNH. Let's take a look. Got to go to the weekly log chart for this one. Ooh, they haven't been doing that hot. They've been coming down. SPY taking off, someone says. Let's take a look. Yeah, SPY's doing good. I mean, obviously, it's at all-time highs. Doing very nice. See how bonds are doing. We do have the FOMC meeting coming up in 2 weeks. And TLT is not doing that good. Today it was up. But yeah, I was actually going to show you guys the rate cut stuff here using the poly market. Let me send you guys the link again for poly market. And by the way, I'll send the link to our homepage again. We do have a sale running right now. You guys can get a trial of TrendSpider for just like $9 if you want to try it out and follow along with the stream today. Let me see. Yeah, we can pull up Netflix. I'll leave it up right here. Go to the 5-minute. It's really had its move from the market close, and we're kind of just waiting, I guess, for the call. But they did have a double beat on earnings for anyone that just joined in. Netflix did have a double beat. Did it update? Yeah, it did. So our reports tab is already updated. So they did well, but we're just waiting to see forward guidance. Speaking of Fed rate cuts, let me show you guys what I was talking about on poly market. Let me pull up the poly market suite here. You can go ahead and check out once you upload or import this poly market indicator. Let's see if it's still in here. So there's how many Fed rate cuts, which I have right now. U.S. recession is a good one. Fed decision in July. Here it is. So there's people betting on what the rates will be at for the next Fed decision. And right now you can see no change. is 96%. Everybody thinks there's going to be no rate cut, no rate hike. So that's what everybody's pricing in now. And you can see it right here live on your chart with the poly market setup. And it's interesting because like poly markets, yeah, it's a betting prediction market, but it actually is pretty useful, guys, for like analyzing the markets when you have these relevant ones like the Fed or rate cuts. Like, because you see TLT pretty much peaked out right here as this chance of no change went up. So TLT benefits from a rate cut because rates go down, bonds go up. TLT is bonds. And as you can see, when the probability of no rate cut was increasing, TLT went ahead and went down. So you can actually use it for solid analysis, and you can set up alerts too. You can create a multi-factor alert, just add a condition with an indicator, use a 15-minute type poly market, and just pick the right one. This one's the total volume, and it'll say right here, Fed decision in July. And I was using option 2, which is a 25 basis points decrease. So if you go ahead and use this one, and you can do like crossed up, a constant value of like, I don't know, 5%. So what this is going to do, if you went ahead and created this alert, is that it would send you alert when the chance of a rate cut started to increase over 5%. And so you could be the first one to know if the rates odds are changing, and it's updated in real time. You can get alerted right on TrendSpider. You can send it to your, like a Discord, to your phone, whatever it is. You can even set up a strategy to buy a stock using Signal Stack with this setup, with this alert. So definitely recommend you guys check out this poly market integration. It's very cool. There's tons of other stuff you guys can check out on here as well. What price will Bitcoin hit? Ceasefire. Related to the market, there is a recession one. The chances of a U.S. recession in 2025. And if you go on SPY, this definitely correlates with the market. When the chances of a recession were at 65+%, the market was at its bottom. So if you see this recession probabilities increasing, likely the market's decreasing, you can set an alert for that to alert you, and it might be a good buying opportunity. So a couple cool ways to use the new poly market integration to show you guys. Yeah, if you do use, Signal Stack and TrendSpider for your bots, it's definitely something worth looking into. And you can use any poly market prediction market. So, and you can do that using the custom one. If you go to the settings here, you can just paste the link of the poly market link into there, and you can track any market right on your charts, set alerts, build a strategy around it. And the strategies can be used as alerts too. Like if you open the strategy tester and you add a condition with an indicator, like poly market, let's go use that same one. Or you can use this US recession one. Let's see. So that's custom. Yeah, US recession in 2025. Let's just say you want to do it let's just say you want to be alerted every time it crosses up a constant level of, I don't know, 50. 50 would be around here. That's kind of when the bottom was. And then the exit condition, if you just want to use it for alerts, you can just set a trailing stop or something like that. And then just save this as a bot. Let's see. Yeah, I'll just do test, save, and you can, let's see here. You have to run it first, and it'll back test it for you. See, it went long, basically at the bottom right there at that trailing stop. But then you can click deploy as a bot, and then you can run it to your email, a webhook, just right to your broker or like a Discord server, SMS, email. Just get constant alerts anytime this thing crosses over a 50% chance of a US recession. Another cool way to use that. So I want to show you guys that. Let's see. Let's pull up Netflix again. And again, I'll drop the link to the poly market suite in the chat for you guys if you wanted to take a look at it. You can see the whole store page. There's like 5 indicators for their poly markets on TrendSpider. All pretty similar, but one you can put into custom links. Another one it's by volume. Another one it's by total capital allocated. And then there's one for like the last 24 hours trending stuff and like a last week trending. So you can stay on top of all of them automatically right there. So let's take a look at Netflix. What time is it? It's 1:35. Should have a call here in 10 minutes. Let me make sure you guys are able to hear this. Let me go ahead. I'm going to stop sharing. There I am on the screen. Share screen, entire screen, system audio. There we go. All right. So you guys should be able to hear the call once it goes live now. What do you guys think of the new stream setup, though? Kind of cool. Yep, everyone's waiting for Netflix to start their earnings call. Should be able to get it streamed live for you guys. You guys should be able to hear it once it pulls up. Let me actually pull this up on my YouTube over here. Should be able to get it right onto the screen as well for us. I don't know if there's going to be anything there, but if there is, we'll see it. Where's the picture in picture? Yeah, anyway, we'll be able to hear it. Let's see. Yeah, Netflix is literally basically sitting at where it was a second ago. Close that for now. But yeah, we'll see what's going on here in 8 minutes. We'll see how the forward guidance is looking. What else is anyone looking at? Is any other big tech moving right now? Not really on Tesla. Let me pull up that scanner again, or build the scanner real quick to see what earnings are going on. Or you could just, yeah, let's just do this. No, let's use what's happening now. This is another tab you guys can use. I have it set up earnings. All you have to do is go to add a feed here, and then you have all the stuff. We have the Pelosi tracker, EPS surprises, upcoming earnings, a bunch of stuff you can use to see basically what's happening now. And for here, I'm going to do date is today for earnings, so I can see the earnings happening today. What else do we got? IBKR. IBKR just reported earnings. Looks like they're doing pretty well. Yeah, they're doing good. IBKR, did they beat? EPS beat and sales beat. So double beat on IBKR. Let's take a look at their chart. Yeah, looking good. Is that an all-time high? Good for Interactive Brokers, sitting at all-time highs. Interactive Brokers does work with Signal Stack too, by the way, if you were curious. All right, we all look up Snapchat. Let's see. Snapchat's been a wild one. They are still down in the dumps on the weekly, but it looks like they're starting to catch some momentum. I mean, small caps themselves, what's the market cap here? Don't even know. It's around, what, 14 billion? So, yeah, it's like a mid cap. But, I mean, they're starting to catch some momentum for sure. Let me draw a horizontal line. Looks like they had like a pivot around this area or so. They're pretty much trading above it. Yeah, I mean, they definitely have some momentum. Definitely have some momentum. I don't know. Maybe it's a deep value play. What's their EV to sales? EV to sales sitting at 2.6, which is pretty low. PE ratio sitting at 55. So, I mean, not terrible. Hood, I love Hood. Hood has been going crazy. Hood at all-time highs. They hit another one today. Yeah, beautiful, beautiful chart on Hood. EV to sales ratio is at 12 now. It's getting a little up there, but they're growing like crazy. Absolutely growing like crazy. They IPO'd at what price? Open at 38, and they're sitting at 105 now. I mean, it was a terrible time to hold during the IPO, or after the IPO, I should say. But, once they hit this IPO price, We got some movement, some stagnation there, right at this level here around 38. But then people started loading up. Yeah, bull, honestly, I don't mind bull. It's been, oh, look, it's starting to pop. This one was actually on my radar not too long ago. I don't disagree. I mean, I think bull, like Weeble, I don't use them. I've never used it. I think I might have used it once, but I mean, it's not something I would use, but I think it does have some potential for sure. I definitely don't hate it. Yeah, and their chart's looking all right. Definitely looking okay. Looks like they're starting to want to break out. I think small caps, you guys they've been doing pretty well. We go to IWM again. I think, I mean, they're definitely lagging behind the large caps. So who knows? Maybe with this rate cut talk, I mean, there's a good chance we get rate cuts. It just really depends if we get 1 or 2 rate cuts by the end of the year at this point, I think, unless they decide otherwise here at the next FOMC. But, you know, rate cuts are good for small caps. And you can see seasonality in July for IWM is 63%, and then it falls off down in August. Then it picks up again at the end of the year. So I don't know. We could definitely see an end of the year IWM small cap style run. Let's see what else reported today in our What's Happening Now tab. I don't think there's anything too crazy. Pepsi. Looks like Pepsi did pretty good. Yeah, Pepsi is loving earnings right now. Oh, they had earnings this morning. Okay, that makes sense. So you can actually see on the weekly. Yeah, looks like they are starting to bottom out on Pepsi. I mean, there's this clear pivot right here at this low right there. And they bounce right off of that. Let me see if there is any trend lines. Downtrend lines, nothing there. I think standard is pretty good. Yeah, not much. It looks like there's a downtrend line. Let's see. Maybe not. Yeah, I got something there. So I don't know. I could reject this sort of downtrend, but we'll see. I mean, revenues, honestly, the revenue is, this quarter was pretty good earnings-wise, but it's been pretty stagnant on Pepsi. Yeah, that would be interesting. A SPY gap up and then dump. Oh, was TSM today? That one flipped my radar. Looks like TSM is having a good all-time. Oh, it's pre-market. Okay. Yeah, TSM had earnings pre-market. They had a gap up. Wasn't a crazy big gap. But there is a gap. Circle. Circle's a fun one. Wow, look at that. Man, if you just bought Circle at the IPO and held, you are just sitting pretty. Should have done it. We up 252% in about a month. And look at that. Starting to form this base, higher low. Honestly, that's looking pretty nice, you guys. We had this big volume on the breakout. Pretty dead volume here on the red candles, which is a good sign. And then the fact that we're getting these big volume jumps on these green candles is looking nice. There's not much fundamentals to go off of, though, is the only problem there. But technically, it's setting up pretty well. Yeah, it's a good one. But then there's another one. I think Chime was another recent IPO that did the exact opposite of Circle. So, yeah, you never know with IPOs is kind of the moral of the story here. Anything happened to Coca-Cola? I haven't really looked at Coca-Cola. After what? After the lied about them agreeing to change their formula? I don't know. But Coca-Cola is doing Coca-Cola's thing and just going sideways and paying dividends. Sitting near all-time highs, though. Always be a solid one. What else had earnings? We're going to have the call here in about 1 minute. Let's see what happens. I think you guys can see that. So we'll see. We will see. Yeah, we should hear it when it pops up. Let's see what else we got, though, for now. GE had earnings. GE has been doing really good. Look at that. It's been going straight up. Holy moly. Yeah, GE fell off for a while, but now, wow, look at that. Look at this. It just doesn't go down. How much is this up from the bottom? 582% from the 2022 low. That's a banger. That is a banger. Pacific time. Let's see if Netflix kicks off anything here in a second. I'm not hearing anything. Let me double check. My volume should be fine. Yeah, what else we got going on? What else are you guys looking at? Circle is a good one. Hood, Weeble. You know, look at all those. RYET, someone said earlier. Ooh, recent IPO. Didn't see this one, to be honest, but it absolutely dumped. This one, you went crazy on July 14th, 3 days ago. Yeah, not sure what happened here. That's a crazy dive. 91%? What? RIP. I'm sorry if you're holding this. Wow. That's a crazy day. 91% decline there. Roblox has been incredible. Roblox has been incredible. Look at that. Going for all-time highs. Well, I know another good one is QuantumScape QS. This one's been flying lately. Absolutely flying. Looks like not a single dollar in revenue, but they are flying. It's making like EV batteries. What's Krispy Kreme? Isn't that D-Nut? Yep. Wow, this one fell off. Holy moly. What is the EV to sales? EV to sales down at 1. Yeah, I mean, that's a sell-off play for sure. It's to buy the dip and pray. 71% decline. Wow. 71% decline. I didn't even know Wendy's was traded. What's the Wendy's ticker? Actually, no, I did know that. What is it? WND. I don't know what the ticker for Wendy's is. LOGC. Oh, look at that. You guys hear that? They're doing the Squid Games music for the intro to this earnings call.
Good afternoon and welcome
you guys hear
to
this?
Netflix
I'll
Q2
shut up if you guys can.
2025 earnings interview. I'm Spencer Wong, VP of Finance, IR, and Corporate Development. Joining me today are co-CEOs Ted Sarandos and Greg Peters and CFO Spence Newman. As a reminder, we'll be making forward-looking statements and actual results may vary. We'll take questions submitted by the analyst community, and we will begin with our results and our forecast. The first question comes from Steve Cahall of Wells Fargo. The question is, since the revenue increase in your forecast is primarily FX driven, we're curious about the components of the constant currency increase. Is this due to a better underlying revenue growth, or are there specific expenses?
You guys can hear this, right? It's double checking. Like someone in the chat, let me know if not.
I will take that one. Thanks, Steve. So as you saw in the letter, we increased our full year revenue guidance to 44.8 to 45.2 billion.
Just said increased revenue guidance.
The prior guide of 43.5 to 44.5 billion, so up about $1 billion at the midpoint of the range and a tighter range. As you noted, primarily reflects the FX impact from the weakening dollar relative to most other currencies. But the good news is we're also seeing strength in our underlying business.
Cool.
We've got healthy member growth.
Go on mute for a second here and listen.
Nicely at the end of Q2, a bit more than we expected. And we think that'll carry through with our strong back half slate. So we're reflecting that in our latest forecast. And we're also seeing nice momentum in ad sales. Still off a pretty small base, but good growth. And it's on pace to roughly double our revenue in the year. And it's a bit ahead of beginning of year expectations. So when we carry all that through to operating margin, our operating expenses are essentially unchanged, which is part of your question. So they're basically unchanged forecast to forecast. So we're largely flowing through the expected higher revenues to profit margin. So that's why our updated target full year reported margin is up a point from 29 to 30%. And that 50 basis point increase in FX neutral margin is really just that revenue lift from stronger membership growth and ads relative to prior forecast flowing through to margin.
Thank you, Spence. We'll take our next question from Barton Crockett of Rosenblatt Securities. Why is operating margin guidance for the full year only 30% after the upside in 2Q and a forecast of 31.5% for the third quarter? Is there a timing issue, FX issue, or is there a new level of spending that will continue beyond the fourth quarter of 2025?
Well, this is really mostly timing. So thanks, Barton. We primarily, as a reminder, we primarily manage to full year margins, and we expect our content expenses will ramp in Q3 and Q4. We've got many of our biggest new and returning titles and live events in the back half of the year. We've also, Q4 is typically and generally almost always is a heavier film slate. Sure, I expect we'll talk about more of this on the call. We'll also be marketing to support that heavier slate, and we're continuing to aggressively build out our ad sales infrastructure and capabilities through the year. So all of that is to be expected. We can manage to it. We manage to those margins, and even with that back half ramp in expenses, we expect operating margins to be up year over year in each quarter, including Q4. And as just noted, we expect to deliver strong full year margins as we just took up our guide to 29.5% FX neutral, 30% reported.
Great. Thanks, Spence. The next question comes from Tom Champion of Piper Sandler. How has your view of the consumer and the macro economy changed over the last 90 days?
Similar to last quarter, we're carefully watching consumer sentiment in the broader economy, but at this point, there's really nothing significant to note in the metrics and the indicators that we get directly through the business. Those are retention that remains stable and industry leading. There have been no significant shifts in plan mix or plan take rate, and the price changes we've done since the last quarter have been in line with expectations. Engagement also remains healthy. So things all look stable from those indicators, and big picture, entertainment in general and Netflix specific have been historically pretty resilient in tougher economic times. We also think that we are an incredible entertainment value, not only compared to traditional entertainment, but if you think about other streaming competitors, when we start at $7.99 in the United States, and you think about all the entertainment you get, we have a belief and expectation that the demand for not only entertainment, but for us specifically will remain strong.
Thanks, Greg. I think it's a nice follow-up to this question will be on advertising. So from Ben Swinburne of Morgan Stanley, can you share any data points around your upfront negotiations?
Yep. As we noted in the letter, our US upfront, it's nearly complete. We've closed the large majority of deals with the major agencies. Those results have generally been in line or slightly better than our targets and consistent with our goal to roughly double the ads business this year. And what are advertisers excited about? Growing scale is something we definitely hear. Also a highly attentive and engaged audience. So bigger audience, but also an audience that's more engaged relative to our peers. The rollout of our own ad tech stack, which helps deliver a bunch of features. And then our slate, which is generally amazing and includes a growing number of live events that advertisers are excited about.
Great. Follow-up question on advertising from Vikram of Baird. How have advertisers in the US responded to the Netflix ad suite rollout since the April launch? What features and capabilities are attracting the most interest? And how is the initial feedback in other regions outside of the US?
We've completed the rollout of our own ads tech stack, the Netflix ad suite, to all of our ad markets now. So we're fully on our own stack around the world at this point. That rollout was generally smooth across all countries. We see good performance metrics across all countries, and the early results are in line with our expectations. Now we're in this phase of learning and improving quickly based on the fact that being live everywhere means that you get a bunch of feedback about what we can do better, which is great. As we mentioned before, the most immediate benefit from this rollout is just making it easier for advertisers to buy on Netflix. We hear that benefit, that ease from direct feedback, talking to advertisers. They tell us that it's easier. We see it in our overall sales performance. We've seen it in increased programmatic buying. So all of these are consistent, with what we were expecting, both qualitatively and from a metrics perspective. We're also, I guess, worth noting that we're going to roll out additional demand sources like Yahoo. That'll further open up the market for us. Long-term, being on our own stack, that improves the speed of our execution to deliver this, pretty significant roadmap of features that we have in front of us. It's things like improved targeting and measurement. There's also leveraging advertiser and third-party data sources, which we definitely hear demand for as well. And it will ultimately allow us to improve the ad experience for our members, which is critically important. So that means better ads personalization. So the ads that I see are increasingly different from the ads that, let's say, Ted would see, and they're more relevant for each of us, which is good for us as users, and it's good for the brands. We're also going to be introducing interactivity in the second half of the year, so that's exciting. So that's all to say this is, a pretty significant milestone for us, one we're super excited to get behind us, because now we can shift into this steady release cycle where we're dropping new features all the time, both for advertisers and for members. And that's the development and release model that we have in other parts of the business. So it's fun to be able to get to that point.
Thanks, Greg. I'll move us along now to a set of questions around content as well as engagement. This one comes from Ben Swinburne of Morgan Stanley. 1% engagement growth year over year suggests engagement is down year over year on an average per member basis. How do we reconcile that with engagement growing on a per member household basis, if that's still accurate?
So total view hours did grow a bit in the first half 25, and that's despite a particularly back half weighted slate. But to your point on engagement on a per member basis, we've mostly been focused for the last few years on measuring engagement on what we call an owner household basis. So this takes out the borrower effect. And we obviously think this is the best way to assess our engagement per member because it removes the tricky comparison impacts from paid sharing. So that metric, per owner household engagement, has been relatively steady over the past 2.5 years throughout the rollout of paid sharing and amidst increasing competition for TV time as more viewing moves to streaming and gets this on-demand benefit. So we're glad to have held that normalized engagement level, but we clearly also want to increase it. And to that end, we're optimistic and expect that our engagement growth in the second half of this year will be better than in the first half, given our strong second half slate.
Thanks, Greg. Great segue to Doug Ammuth's question from JP Morgan. The content in the back half of the year looks strong, with Squid Game 3 already the third most popular non-English series ever, and Wednesday and Stranger Things releasing in the coming months. You often say that no single title drives more than 1% of total viewing. So how do you think about the business currently as being quote unquote hit boosted or hit driven? And are you confident that both original and licensed content momentum can continue in 2026?
Yeah, I'll take that. And thank you, Doug. On the first part of your question, we're definitely riding this long-term trend of linear to streaming, and that has a natural adoption curve. But we can accelerate our growth with big hits. But as you said, each one of them, even in success, is going to drive about 1% of total viewing. So you need a lot more than just a big hit every once in a while. So to your point, it's not about the single hit. So what it is about a steady drumbeat of shows and films, and soon enough games that our members really love and continue to expect from us. So like by way of example, we had 44 individual shows nominated for Emmys this year. So that's what quality at scale looks like. We ended the quarter with a huge return of Squid Game. Thanks for acknowledging. Go into the second half with the return of Wednesday and Stranger Things, and a really strong slate of supporting titles and favorites like and new shows. Like this week we had Eric Bana's Untamed. Next week we have Leanne Morgan's new comedy show, Leanne. Both look really great, and that's just to name a few. And the back half of the year also has this perhaps the most anticipated slate of new movies that we've ever had. That starts on the 25th with Happy Gilmore 2. Followed by, we have a new Knives Out film. We have new films from Noah Baumbach, from Guillermo del Toro, from Catherine Bigelow. And it does not stop there. It does roll right into 2026. And that's the second part of your question. And we're looking forward to movies like The Rip from Ben Affleck and Matt Damon. Charlize Theron's new movie called Apex, which is a phenomenal action movie. Millie Bobby Brown is back in Enola Holmes 3. Recall that in 2023, Enola Holmes was our biggest, 2 was our biggest movie. So we're looking forward to that new sequel. And Greta Gerwig's Narnia is going to be phenomenal. And then on top of that, we're talking about return of Bridgerton, One Piece, Avatar: The Last Airbender, all 3 huge successes around the world. The Gentleman, Four Seasons, Point Break, I'm sorry, Running Point, sorry. Beef, which as you recall in 2023, won just about every award imaginable and was a gigantic success for us. It's back for a new season in 26. Three Body Problem, Love is Blind, Outer Banks, and not just from the US, from France, we have Lupin, from Spain, we have Berlin, we have a new season of 100 Years of Solitude from Colombia. So big hit returning shows and new series from each of our regions around the world. And the new stuff we've got coming up, like Man on Fire, a reimagining of Little House on the Prairie. The Duffer Brothers from Stranger Things have a brand new show, The Burrows. We've got Human Vapor from Japan, Operation Saffron Cigar from India. Can This Love Be Translated from Korea? So again, popular programming, new and returning from all over the world in 2026. Unscripted shows like the reboot of Star Search. We've got Into the Doll universe with Wonka's Golden Ticket, which we're really excited about. And in our live, we've got a few surprises for you next year. But of course, we have our NFL Christmas Day doubleheader that we're really thrilled about too. So we're really incredibly excited about the back half of this year and confident that it keeps rolling in 26.
Thank you, Ted. We'll take the next question from Rich Greenfield of Lightshed Partners, who asks, are you concerned by the stagnation in your viewing share domestically? I think Rich is probably referring to the Nielsen gauge data. Do you need to spend more on programming or spend differently to materially move your viewing share higher?
Yeah, thanks, Rich. Look, our goal continues to be to continue to grow our share over the long term. And over the past few years, you're right, we've been able to maintain our share even as we've worked through a growing number of TV-based streaming services, some free, some paid, and the impact of paid sharing that Greg mentioned earlier, as well as this 2025 slate that was more back half weighted than we typically have in previous years. But over the long term, we tend to keep growing as the other 50% of TV viewing migrates from linear to streaming. And we'll do that by doing what we've always done, continuously improve the service. So keep in mind, since 2020, our content amort has grown more than 50%, from under $11 billion to more than $16 billion that we expect to do this year. And over that same time period, we definitely we saw increased spending, but also increased engagement, increased revenue, increased profit, and increased profit margin. So that's our model in action. It is our objective to sustain healthy revenue growth, reinvest in the business to improve on all aspects of the service. And that includes growing content spend, strengthening and expanding the entertainment offering, and to drive that positive flywheel of growth by adding value to our members, and all the while growing engagement, revenue, and profit around the world.
Great. Thank you, Ted. I'll move to Alan Gould from Loop Capital next. Can you provide more information on the TF1 partnership? Why did you choose to add TF1 in France as opposed to other broadcasters as your first partner? Why is now the right time to create such a partnership? Should we anticipate similar partnerships in other countries?
Yeah, perhaps just start with the rationale for the partnership. You would think with that long list of amazing titles that Ted just rattled off, we would have enough to satisfy every person on the planet. But it turns out we actually consistently hear from our members that they want more. They want more variety, more breadth of content. So the fundamental purpose for this TF1 partnership is all about that goal of expanding our entertainment offering. How do we enhance the value we deliver to members? We want to provide more content, more variety, more quality. So just as you've seen us do with licensing and production, this is just another mechanism to expand that offering. And in this case, it's specifically about highly relevant local for local content in a country that has strong demand for that local content. And this is an accelerated way to satisfy that need. Why now? Why was this time the right time? Well, we've invested a lot in a bunch of enabling capabilities that are either required or highly leveraged by this deal. You can think live, ads, the new UI, among other things. And then why TF1 versus some other partner? Well, we know each other really well. We wanted our first partner to be in a big territory. We wanted to pick the leading local programmer. We wanted to be highly aligned in terms of the deal and the shape of the partnership and the values that we thought we could generate mutually by working together for our customers. And we both look at this as an opportunity to learn, to figure out how do we scale the local content that TF1 is producing to more customers in France. So we're looking forward to seeing what consumers think. You never really know until you get out there and get the real reactions. And then obviously we'll factor that into our plans going forward.
Thanks, Greg. From Robert Fishman of MoffettNathanson, with reports suggesting Apple is now in the driver's seat for F1 rights. Haha, pun intended, I guess. Plus UFC and MLB still looking for new deals, and the NFL may be looking to come to market a year earlier. Can you share updated thoughts on how you are approaching sports rights for Netflix and where you draw the line on something that can move the needle?
Well, thanks for that, Robert. Remember, sports are a subcomponent of our live strategy, but our live strategy goes beyond sports alone. Our live strategy and our sports strategy are unchanged. We remain focused on ownable, big breakthrough events because our audiences really love them. Anything we chase in the event space or in the sports space has got to make economic sense as well. We bring a lot to the table, and the deals that we make have to reflect that. So live is a relatively small part of the total content spend, and we've got about 200 billion view hours. So it's a pretty small part of view hours as well right now. But that being said, not all view hours are equal. And what we've seen with live has outsized positive impacts around conversation, around acquisition, and we suspect around retention. So right now we're very excited where we sit. We're very excited with the existing strategy. We're excited about the Canelo Crawford fight in September and the SAG Awards and our weekly WWE matches. And the NFL, of course, which is a great property. And we're happy to have Christmas Day doubleheader, which includes Dallas versus Washington and Detroit versus Minnesota. So today our live events have all primarily been in the US, keep in mind. So over time, we're going to continue to invest and grow our live capabilities for events around the world in the years ahead. So we're excited, but the strategy is unchanged.
Thanks, Ted. Good follow-up question on that one from Steve Cahall of Wells Fargo. What investments have you made to increase your capabilities in producing live events? What have you been able to do in-house in 2025 that you couldn't do last year? And how long will it take before you have the capability to produce large-scale events like NFL games?
Yeah, thanks, Steve. I'd say, remember, when we started original scripted programming, we had zero production capability. House of Cards was, in fact, thinking about our first 3 years of original programming, all of those shows were produced by others. You have to go three years later, we produced Stranger Things in-house. Today, we still have shows that are produced by others. Universal, 20th Television, which is Disney, Paramount, Lionsgate, Warner Television. There's lots of available infrastructure to produce TV, and that is true of live events and sports as well. When we do more and more, we may choose to bring some of that in-house. We've already produced a few, and we're just as likely to continue to use partners with existing production infrastructure and work to make sure that those productions are bespoke and they feel like they could only be on Netflix. So you shouldn't think about the mix of partnerships and self-producing as we think about it as a scaling tool, not backfilling some lack of ability in some area of the company. So, and I should note, by example, CBS is a phenomenal partner producing the NFL games with us, and we're thrilled to work with them again this year on Christmas Day.
Maybe take this opportunity just to make some commentary on the general capability we've been building with live. When we start something new, we pretty much expect that we're not going to be brilliant at it at the beginning. But that's true. Unfortunately, we don't have any really reason to believe that. But we don't let that stop us from kicking off initiatives that we believe have a strong strategic rationale, even though we know we need to develop that capability. And of course, our job is to get out there and learn by doing and get world-class as quickly as we possibly can. And if you look at our current capabilities around live, we are in just a completely different place today compared to when we first started. As a good example that just happened last Friday, we had our first concurrent pair of live events. We had Taylor versus Serrano globally delivered alongside WWE SmackDown, which was delivered ex-US, both events at scale and delivered with extremely high quality. So it's great progress we've seen, and we've got a great roadmap of features ahead of us to continue to enhance those experiences for folks.
Thank you both. Last question on the content side, or the topic of content, comes from Ben Swinburne of Morgan Stanley. What are the learnings from the success of K-pop Demon Hunters? More animated musicals with fictional bands, perhaps? Question mark.
Man, that is a question from a man who's probably has that movie playing on repeat in their home, if I'm guessing correctly. K-pop Demon Hunters is a phenomenal success out of the gate. One of the things that I'm really proud of the team over is original animation, not sequel, not live action remake. Original animation feature is very tough and has been struggling for years. And I think the fact that our biggest hits now, Leo, Sea Beast, and now K-pop Demon Hunters, are original animation. So we're super thrilled about that. The mix of music and pop culture, getting it right matters. The storytelling matters. The innovation in animation itself matters. And the fact that people are in love with this film and in love with the music from this film, that'll keep it going for a long time. So we're really thrilled. And now the next beat is, where does it go from here? So, you know, we put in the letter how successful the music has been and continues to be. And we think that'll drive fandom for this fictional K-pop bands that we have. But more importantly, for the song Golden and for the song Soda Pop, these are enormous hits, and they all came from a film that's available only on Netflix. So we're really excited that we can pierce the culture with original animated features, considering that folks have been poking us on it.
Let's do it again later in the year within your dreams, right, Ted?
Absolutely. In Your Dreams, another very funny one, and also completely original. So,
yeah.
Great. I'll move this on now to a few questions on plans as well as product. So from Michael Morris of Guggenheim, he asks, Netflix continues to broaden content genres, notably with live sports and the recently announced TF1 partnership. Is there a path to additional tiers of service based on types of content available, or will Netflix always make all content available at the ad-free / ad-supported price points?
I've learned to never say never, so I would say we're remain open to evolving our consumer-facing model. I think we've got a few principles, important principles that we're carrying with us that I don't see changing significantly. One is we want to provide members choice, right? So how do we have a different set of plans, a different price points, different features that allows folks to opt into what is the right Netflix for them? Also, how do we provide good accessibility to new members around the world? We want to grow, and that means making sure that we've got accessible price points. And then finally, the plans we offer, they have to, ensure that we're having reasonable returns to the business based on the entertainment value that we delivered, and we're hoping to grow those, and so those returns would grow as well. And obviously, the reason to do that is we can continue to reinvest in adding more entertainment and building a better experience. And maybe one other thought too is there's a component of complexity and choice stacks that we have to consider in how we think about our offering is structured. So having said all that, though, I think we believe that the bundle is a great value for members. It allows members around the world to access a wide range of entertainment in a very easy way at a very reasonable price. So I would expect that will remain an important feature of our offering for the foreseeable future.
A lot of value and simplicity, huh?
Yeah.
Great. From Rich Greenfield of Lightshed Partners, help us understand why your new UI / UX is so important as you expand live content. Beyond live, can you provide some color on what metrics have improved since the launch of the new UI, such as speed of users finding a title and change in failed sessions?
Yeah, as we said previously, it's really hard for a new UI to immediately be better than the UI that we've had for the past 10 years. It's been iteratively evolved and improved. But now that we've actually rolled out this new UI to the first large wave of TV devices, we're actually seeing performance that's better than what we saw in our pre-launch testing. And to some degree, that's expected because we made some improvements based on the results of that testing phase. So it's exciting to see that those delivered actual better results. But the rate of that change actually gives us increased confidence that this new experience will drive better performance by the variety of metrics we look at, some of which include the ones that Rich is mentioning, in relatively short order. And then maybe just a point on why do we build this and launch this new experience in the first place? Why was this so important? Bluntly, the previous experience was designed for the Netflix of 10 years ago, and the business has evolved considerably since then. We got a wider breadth of entertainment options. We got TV and film, more of those, of course, from around the world, but now also games and live events. And if you think about the discovery experience that's best suited for these new content types, it's inherently different. Helping our members understand that there's a really good reason for them to launch Netflix and tune in at 7 p.m. on a Friday night versus just showing up whenever they were free and wanted to be entertained. That's a totally different job, and we really need a different user interface to do that job well. Add to that, we saw the opportunity to leverage newer technologies like real-time recommendations that respond dynamically to what you need from us in that specific moment. So the Netflix you get on a Tuesday night is different from the Netflix you get on a Sunday afternoon. But all of those rationales together and what we're seeing in terms of the performance so far, we're very confident that we've got a much better platform in this new user experience to build from, to continue to improve, and that'll help us meet the needs of the business over the years to come.
Thanks, Greg. The next question comes from Steve Cahall of Wells Fargo. YouTube is the only streamer that exceeds Netflix in terms of US share of TV time. Do you see an opportunity to bring notable YouTube creators and their content exclusively to Netflix? How big could this opportunity be?
Thanks, Steve. Look, we want to be in business with the best creatives on the planet, regardless where they come from. Some of them are here in Hollywood, others are in Korea, some are in India, and some are creators that distribute only on social media platforms, and most of them have not yet been discovered. So for those creators doing great work, we have phenomenal distribution, desirable monetization, brilliant discovery in our UI, and a hungry audience waiting to be entertained. So Steve, you recently, I think I listened to you on a podcast where you talked about our business model and on this, I believe on this very topic. And we largely agree with you and believe that working with a wide set of content creators makes a lot of sense for us. And as you said, if I'm remembering it right, not everything on YouTube will fit on Netflix. And we couldn't agree with that more. But there are some creators on YouTube like Miss Rachel that are a great fit. If you saw in the engagement report, she said 53 million views in the first half of 2025 on Netflix. So she clearly works on Netflix. And we're really excited about the Sidemen and Pop the Balloon and a wide variety of creators and video podcasters that might be a good fit for us. And particularly if they're doing great work and looking for different ways to connect with audiences.
And maybe broadening this out for a second and taking that question to look at sort of all of the competitors that we face for share of TV time. You know, we've always said that the market for entertainment is very large, and we face competition from all kinds of directions. So whether it's linear or streamers or video games or social media, it's also a very dynamic competitive market as we and all of our competitors seek to provide better and better options for consumers. And one of those changes, one of those vectors of dynamicism has been that sort of steady, inevitable shift to streaming and on demand as more services move to deliver their content in a way that we all know consumers want. That creates increasing competitive pressure for us that we've got to respond to. We also see free services as a form of strong competition. Free it's very powerful from a consumer perspective. So it's not surprising that some free services are growing in engagement. But I think Ted said it well earlier in the call, not all hours are created equal. And we have a different profit model from other services, a strong profit model. So we're going to compete to win more moments of truth for sure, but especially compete to win those most profitable moments. And back to your specific question, it's worth remembering there's about 80% of total TV view share that neither Netflix or YouTube are winning right now. We think that represents a huge opportunity for which we are competing aggressively, and we aim to grow our share.
The vast majority of our money and attention is focused on that 80%.
Thank you. Next question from Justin Patterson of KeyBank. Could you please talk about your generative AI initiatives? Where do you think Gen AI will be most impactful over time, revenue or expense efficiency?
Well, let me start with Gen AI. We remain convinced that AI represents an incredible opportunity to help creators make films and series better, not just cheaper. There are these AI-powered creator tools. So this is real people doing real work with better tools. Our creators are already seeing the benefits in production through pre-visualization and shot planning work, and certainly visual effects. It used to be that only big budget projects would have access to advanced visual effects like de-aging. Remember last quarter we talked about Pedro Paramo. Well, that's just no longer the case. And you know, this year we had El Tonata is a very big hit show for us from Argentina. And in that production, we leveraged virtual production and AI-powered VFX. And there was a shot in the show that the creators wanted to show a building collapsing in Buenos Aires. So our Eyeline team partnered with their creative team using AI-powered tools. They were able to achieve an amazing result with remarkable speed. And in fact, that VFX sequence was completed 10 times faster than it could have been completed with traditional VFX tools and workflows. And also the cost of it wouldn't have been feasible for a show in that budget. So that sequence actually is the very first Gen AI final footage to appear on screen in a Netflix original series or film. So the creators were thrilled with the result. We were thrilled with the result. And more importantly, the audience was thrilled with the result. So I think these tools are helping creators expand the possibilities of storytelling on screen. And that is endlessly exciting.
And maybe to cover a few of the other areas, you know, the member experience is a place where we feel like there's tons of opportunity to leverage these new generative technologies to improve the experience. You know, we've been in the personalization and recommendation business for, you know, 2 decades, but yet we see a tremendous room and opportunity to make it even better by leveraging some of the more newer generative techniques. We're also rolling out, have piloted right now, a conversational experience that allows our members to basically have a sort of natural language discussion with our user interface, saying, you know, I want to watch a film from the 80s that's, you know, a dark psychological thriller, get some results back, maybe iterate through those in a way that you just couldn't have done in our previous experiences. So that's super exciting. And, you know, we see that all of the work that we do there essentially is a force multiplier to that large content investment that we're making. If we do a better job there, that means every dollar that we spend means more value back to our members by connecting them with the titles that they're truly going to love. Advertising is another really great area. You know, we've seen it's a high hurdle to create a brand forward spot in a creative universe of one of the titles that we're currently carrying, but it's very compelling for both watchers and for those brands. And we think these generative techniques can decrease that hurdle iteratively over time and enable us to do that in more and more spots. So there's a bunch of places where we think we've got an advantage in terms of data and scale, where we can leverage these new generative techniques to deliver just more benefits for our members and for our creative community.
Yeah, if you don't mind me coming back for 1 second, I just rolled off Eyeline, as if everyone knows what Eyeline is. I probably should clarify that Eyeline is our production innovation group inside of our VFX house at Scanline, and they're doing a lot of this work with our creators. So I just realized that I just threw that out there as if everyone knew. So.
Thanks for clarifying, Ted. Let's see. Our next question comes from Brian Pitts of BMO Capital Markets. With your evolving gaming ambitions, including partnerships with Grand Theft Auto and the recently announced Roblox agreement, can you talk to near-term monetization opportunities within gaming?
Sure. We look at the near-term monetization opportunity with games very similar to how we've looked at other new content categories. You can think unscripted or film or on and on. And that's essentially, if we deliver more value in our offering, we get increased user acquisition, we get increased retention, we get increased willingness to pay. So it drives all of the sort of core fundamentals of our business. We've seen those positive effects, albeit in a small way relative to the size of our overall business when it comes to members playing games on the service. We already have those positive proof points. And we're going to ramp our investment in this area, which is currently quite small compared to our overall content investment, as we ramp the size of those positive effects. So we want to remain disciplined in not investing too far ahead of demonstrating that we know how to translate that investment into value for our members. We've seen good progress, as you note, with licensed games like GTA. We've seen good progress with games we developed like Squid Game Unleashed. So you'll see more from us in both of those categories, as well as a whole new set of interactive experiences that we think that we're either in a unique or differential position to deliver. So we're super excited to roll those out over the next year. And then we remain open to the core question, remain open evolving our monetization model, but we have got to get to a lot more scale before that becomes a really materially relevant question. So we're going to do that work first. And it's probably worth restating, the TAM for this market is very, very large. We remain convicted about our strategic opportunity and excited to make more progress.
Thanks, Greg. We'll take our last question from Jessica Reif-Ehrlich of Bank of America Securities. Given your healthy balance sheet and what appears to be a coming wave of M&A in media globally, are there certain types of assets that would strengthen your moat, i.e., what is your view of owning successful IP or studio assets as they come to market?
Well, I'll take that one, Spencer. Thanks, Jessica. Well, look, we agree. Continued consolidation of studio and network assets is likely, but at least with respect to consolidation within legacy media, we don't think it materially changes the competitive landscape. As you also know, we've historically been more builders than buyers, and we continue to see big runway for growth without fundamentally changing that playbook. You heard a lot of that today. So we look at a lot of things. We apply a framework or a lens to those opportunities when we look. It's, is it a big opportunity? Does it strengthen our entertainment offering? Does it strengthen our capabilities? Does it accelerate our strategy? And we look at all of that relative to the opportunity cost of distraction or other alternatives. We've been pretty clear in the past that we also have no interest in owning legacy media networks. So that also kind of reduces the funnel for us. But in general, we believe we can and will be choosy. We've got a great business. We're predominantly focused on growing that organically, investing aggressively and responsibly into that growth, and returning excess cash to shareholders through share repurchase. And I think you'll see us continue on that path.
Great. Thanks, Spence. And that will wrap up our Q2 earnings call. So we thank you all for taking the time to join us, and we look forward to seeing you all next quarter. Thank you.
All right, everybody. Looks like that is going to wrap up the Netflix earnings call. What did y'all think? So it's like their forward guidance was pretty good, but the stock really hasn't gone anywhere, to be honest. Didn't really go up much. I guess that people are just expecting it to be good. So it's basically just priced in, but it also didn't go down a whole lot either. So, yeah, it is what it is. Maybe we'll see more of a pullback down to this pivot level down here, but hard to say. We'll see how the rest of the earnings season goes with all of these other stocks coming up that are going to be reporting. What are some other ones? I know we got Tesla next week. We got Microsoft coming. We got all the big tech, Google, Meta, Apple, Amazon, Palantir, AMD. Lots of stuff coming up, you guys. We're probably going to be going live for quite a few of them. Yeah, what did it see? Yeah, price action, very dull. Very, very dull. Usually the stock hasn't moved after a great earnings like this. Wait 3 days just to do anything. Yeah, that's fair. Waiting for a few days to see how things shake up is probably a good idea at this point. But yeah, pretty price action. I was expecting a little bit more out of it, but it's the way it goes. It was a good earnings report. So yeah, can't complain too much, I guess, if you're holding the stock. Yeah. I don't know. Have you guys watched the new Squid Games? I still haven't even watched season 2, but I've heard the third one is good. So at least they got that going for them. Let's see if that poly market indicator updated too. Go to the 15-minute. Oh, yeah, look at this. All the odds are moving. So I think they obviously mentioned Squid Game. Let's see. They're kind of all bundling up here. I think they all ended up hitting. Yeah. If you bet on yes on any of these, you won basically with poly market. They did say Q3. They said Squid Game. They said India, interface, and gaming. So that's why all of them went up to like 100%. Kind of cool. And that's the poly market indicator suite that's now available on TrendSpider, you guys. I'll drop the link to that one more time. If you already have a TrendSpider account, you can use it for free. Yep, market makers always getting the W always getting the W, of course. And yeah, it's on the screen, you guys. But if you haven't already, take advantage of that link. Save you some money on TrendSpider, or just take it for a trial for just $9, you guys. Definitely worth taking a look at if you haven't used it yet. Can do lots of stuff with it. You're a great platform. Fundamentals, technicals, you name it. You name it. You can build custom indicators, scanners. So definitely take advantage of the sale while it's here. But other than that, guys, it's like already, what is it, 5:30 Eastern? So market's kind of dead at this point. So we'll probably go and just call it there. I think futures open in like 30 minutes, but yeah, I think we're going to call it there. Appreciate you guys all for coming. If you guys haven't already, definitely subscribe and hit the notification bell. Give the stream a like if you don't mind. And we'll see you guys in the next one. Hopefully you subscribe and you come visit us again, because we're going to be going live. There's lots of events coming up. We got FOMC at the end of the month. We got many, many earnings calls coming up from big tech. So we'll be here. We'll be here live, and we hope to see you there. All right. Everybody, have a good day. I'll see you guys next time.